Hello and welcome back to another video. Today I'm going to be taking a look at MONY GROUP, which is a small position I have in my personal portfolio. Let's jump in. Okay, so this is a quick snapshot of my portfolio currently. As you can see right at the bottom of the list, I have MONY GROUP, a really small position, £200, roughly 4% of my portfolio in this one. If you have a look at the price chart for this over, well, the maximum back to 2015, it is not good. If you were an investor in 2015 thinking that MONY GROUP and Money Supermarket, Martin Lewis and all that was going to make you some money, you'd be greatly disappointed. So I picked this one up, well, around here, I guess, or here, can't quite remember, 2024, yeah, so it's around here, and it's only gone down. So I've actually lost money on this position. It's the only one in the portfolio where I can say that, but we're going to look through the 2024 results and see if this is a buy, hold or sell. So I've had a read through the report. I'll definitely read it again before making any decisions, but I've come up with some reasons to buy the stock and reasons to sell the stock, and everything in between will be a reason to hold, I suppose, if it balances out. So this is from the report itself. It says strong financial performance. The company reported record revenue of 440 or 439.2 million pounds, up 2%, and the highest ever adjusted EBITDA of 141.8 million, up 7%. I mean, it's going in the right direction. It's a small company. Should I expect more than 2% from this one? It's not exactly a fast growing company. I get that. But this is something that I am interested in, is the positive cash flow. As you can see, operating cash flow increased by 13% to 115.6 million pounds, which is amazing. That is a good thing. So if we have a look at Alpha Spread, this is a great website for visualizing some of this information. So if we have a look at the free cash flow chart, you can see back 2019 we were at a real slump, 36.6 million, and it's been up at 98. It fell down from 2020 to 2022, which kind of explains this drop off here. 2020 is here to 2022. It explains that kind of drop off. And then since July 2022, we've kind of been gradually bringing this up. So obviously the 115 million will be about here. So it's a nice up and to the right for the free cash flow, which is great. I mean, I think that is what has sent the stock up this week. As you can see, it's, you know, it was down 180, high 180s, and now it's over £2 for the first time in a while. So this isn't something that I'm particularly interested in for my thesis on this company, but the dividend did grow 3% this year. It's, you know, it's growth. If you're a dividend investor, I'm sure you appreciate it. They also have launched a share buyback program, 30 million, not massive, but you know, they're obviously going to use cash elsewhere. So I mean, that's great. So now does look like a good time to be purchasing stock. As you can see, we're sort of in a dip again. So it could be a good time for the company to, you know, take some shares off the market and help the investor out. So a key metric that they look at is how much they have saved households. So this year was a record again, £2.9 billion that they have helped save, mainly, you know, the UK public, which is amazing. And it's a big part of their philosophy that the more that they can save people, the more that the company will bring in as a share of that saving, I guess. It's how the business works. So reasons to sell, the money, home services and travel segments have declined by 2%, 7% and 5% respectively. You know, if we're going to get some real growth, we'd want all of our sectors to be growing and none to be hindering. Obviously, there's obviously more competition in these areas. Travel insurance, there's, you know, supermarkets that are getting involved with that and other comparison sites. And maybe people just aren't paying for travel insurance because, you know, pockets are being squeezed by the cost of living, and just paying for the holiday itself is, you know, pushing people over the edge, let alone paying for insurance. Who knows? Maybe we'll see a return to growth in these areas upcoming in the next year. Okay, so another one that they've highlighted is a pay-per-click cost increase. So this is their advertising has cost roughly 19% more in the second half of 2024 compared to the first half. So it's good that they're highlighting this. They're expecting it to go up again in 2025, which kind of explains why they're pushing the app. So they've got the the Super Save Club, which is on an app, to try and lock in users and try not to have to rely on the advertising as much. Okay, so let me know down below what you think of these results. Are they what you expected? Do you agree that the price should have gone up on these results, or do you think that this is a dead stock and I should take my money out as soon as possible? Please let me know. I'd love to hear your thoughts. This is just a quick video, so thank you for watching. Don't forget to like and subscribe. My next video is going to be a portfolio update.